Hi, good evening and good afternoon. I believe we can start now. Um, so, Ali, I believe you are also prepared. So, in between, I believe more participants will join.
Perfect. Yes, I'm ready.
Oh, thank you. Okay, so thank you so much, everyone, for joining us today. Um, as usual, IFA and IPA is always committed to provide the CPD, continuing professional development, different events, mostly in GCC region. We are providing through webinars or sometime in presence conference in UK or in other regions. So today our topic is basically on the USD interest rates, economics indicators, and stocks outlook. So this topic is not only related to US, United States only, but it is impacting the other world in different form of indicators or based on the market analysis. So we have our speaker with us. He is Mr. Ali Merchant. He is a seasoned financial market professional with expertise in technical analysis, treasury, and capital market. He will be introducing himself in detail. So, and at the end of the webinar, I'll let all the people know about our upcoming webinars, as well as now we have a message for the people for the members who would like to reinstate their membership. So at the end of the webinar, I'll talk about it. So thank you so much, Ali, for giving us the time and your availability for today. So it's over to you. Thank you.
Thank you very much. Thank you very much, Salman. Thank you very much to IFA and all the participants for joining this session. So the topic for today is US dollar interest rate. We're going to go through economic indicators, stock market outlook. Now, the dollar interest rate, it impacts globally, right? And most of you are from GCC region, so it impacts you very much because GCC is a pegged currency. Most of them are pegged currencies to dollars. So if there's any change in the dollar interest rate, it impacts your borrowing cost, right? Or your deposits. If you're doing deposit, if you're doing borrowing, if you're doing interest rate swaps, it helps you, right? So let me just and guys, let me just first. It may take a little bit longer than 45 minutes, but I'll try to keep it within 45 minutes. So if you guys want to grab cup of coffee, tea, whatever you like, just please get it, and then we'll get into it. Okay. Now, if you need a few minutes, please just let me know. Do I have? Okay. You can send me in the chat if you need a few minutes. Otherwise, I'll just start with my introduction. So again, thank you very much, guys. So okay. So the content and the agenda is, first I'm going to introduce myself. I'm going to tell you what happened yesterday. There was a biggest event of the central banks. So Fed Chairman Powell was there in Jackson Hole speech. That happens once a year, every February, every August. Most of the key G7 central bankers, they attend that, and they lay the plan for their next outlook for their own economy and what they see globally. Right? We're going to talk about that. We're going to talk about US dollar interest rate, US recession probabilities. And then I'll be just giving you the introduction of TWT, trade with the technicals. I'm the founder of TWT Learnings. So I'll give you a little bit of the background of what was the background in forming that, some of the ideas, some of the quotes from some quotes, and the three-dimensional approach we are using, TWT market rules and approach. Then we'll get into US dollar index outlook. We'll be going through Dow Jones, NASDAQ, S&P seasonality and outlook, and we'll be covering outlook for the mega caps, NVIDIA, Microsoft, Tesla, Meta, and Google outlook, and then we'll go through the Q&A, right? All right, guys. So My name is Ali Merchant. By designation, I am CMD. I am in this financial industry for almost more than 25 years. I had been basically I've been practicing technical analysis for more than 25 plus years. I've worked across Asia, North America, covered Europe through Thomson Reuters. I was in Saudi Arabia. I was covering Saudi Arabia and GCC for a pretty long time. I've covered a couple of central banks. I have covered international banks and regional banks and family offices. Before actually, I started my career with Reuters way back in early 1990s. Been through stock market. I used to write. I started my career in Saudi Arabia with the Dow Jones, and then it was taken over by Bridge Information Systems. So from Bridge, I went to Saudi Holland Bank, which was basically the ABN AMRO Bank of Saudi Arabia. I worked in the Treasury and Capital Markets. Came to Canada, worked with the Sharia compliant fund, and then joined Thomson Reuters. Had about 12 years with Thomson Reuters, covering Europe, Middle East, and Africa, and North America. So that's a little bit brief about myself. I do write. I'm a contributing analyst with investing.com and fxstreet.com. We'll get into it a little bit about it. I have been into financial writing since 2001, 2002. So I used to write for Bridge News, which was a part of Bridge Information Systems. So I was the only analyst outside the US. We had about 7 analysts, and I was the only one who was writing from Riyadh. I was based in Riyadh at that time. So if you can see, there was a newsletter, August 7, 2001. And this one is also 2000. And this one is also 2000. So I used to write about Dow Jones, S&P, and NASDAQ on a weekly basis, and dollar Swiss and German bonds on 10-year German bonds on a daily basis. So that's a little bit brief about myself. Let me move, and I had an opportunity. Yes, I had an opportunity to present to Technical Securities Analyst Association, Golden Gate University, San Francisco, on September 16, 2023. So you can see I presented my thesis and my work on power of trend lines and market outlook using major indices. Okay, so that's a little bit about myself. Now let's get into what exactly has happened yesterday. So yesterday was central banker annual meeting, which is known as Jackson Hole Symposium. Right? So Powell, Fed Chair Powell spoke around 10 a.m. Eastern Time. And what he said. So these are the 5 bullet points of what exactly happened yesterday. He signaled a possible interest rate cut at September 16th and 17th meeting, citing rising downside risk to the labor market, while stressing inflation remains a threat. And what happened to the market reaction? Investor quickly raised odds of 25 basis point cut in September and pushed expectation for about 50 basis point of cut by the year end. US stock market rose, Treasury yield dropped, and dollar dropped. Now, on the other hand, Powell has actually played very smart yesterday. He warned that tariff could lift inflation. So he has kept the room open. So he's not saying that it's a done deal, but he's saying, yes, it's a doable deal. Possibly in a lasting way, though he expects their impact to fade. So he thinks that the tariff can bring the inflation up, but the impact will fade over a period of time, keeping inflation a key risk in policy decisions. Right? So that means he said 2 things. He said labor market is basically, there's a downside risk to labor market. Right? And then he's saying that the tariff inflation. Now, what is the role of US Fed? The role of US Fed is to, their KPI, you said, just put it this way, KPIs, key performance indicator, is to keep an eye on inflation and employment. That's the role of Fed. Now, with this, there is a split in Fed. Some official from Kansas City and Cleveland Chiefs remains wary of rate cut, while others are in favor of, are basically in sync with Powell's idea. Powell also released a new strategic framework linking maximum employment to price stability. Right now, there is the flexibility from Fed Chair Powell to get into to pivot. Pivot means no more. The pivot means the rate between 4.25, 4.5 right at the moment is pivoted. Now there's a time to cut. Now let's look at what challenges Fed has. Why Fed is split? So that is the key concern of Fed at the moment. Right. Now look at, so the job numbers which came last time, if you guys know that Bureau of Labor Statistics was let go by the Trump administration because of the revision. Right. Now, on one hand, there has been revision on the job side. So the jobs have been actually revised for the month of May and June, right? So I will come to the job market in a bit. US retail sales increases in sign of consumer resilience. Consumers are not stop spending. So if you see the month of June and July, US retail sales has gone higher. This is a concern for Fed. On the other hand, which is the major concern for Fed, is the US core CPI accelerated in July. So if you see, it dropped in May and then it picked up in June and July. This is the inflation concern which Powell is mentioning about. On the other hand, on the job side, so if you see after the revision, all sector has negative job growth. Government has 119K minus, trade and transportation minus 40K, business services minus 27K, leisure and hospitality minus 18K, retail trade minus 25, manufacturing minus 12, construction minus 16. So all of them are in negative, right? Now I'll show you what I have done a little bit work on the employment, right? And what my analysis is, right? Now keep this in mind, keep this in your mind that this is the two challenge for Fed: inflation, labor market going down, and less unemployment going higher, but the market spending is a resilience and core CPI is increasing. Let's move to the next chart. Now this is my work. What I have done here is, if you see the orange line is non-farm payroll and unemployment rate, right? Now there is a check between it. Whenever non-farm payroll goes below 100K and it goes below 73K in the history, and unemployment picks up, it drops, you see a large unemployment. We have seen this here. We drop below 73K, higher unemployment. We drop below 73K, higher unemployment. We have seen this in COVID, higher employment. That scenario is coming up now. We are below 73K and unemployment is picking up, right? So that means unemployment side is basically going to impact a lot on the decision making of Fed, next decision of the rates by Fed, right? So that is the key. Let's go. I hope you understood the chart, right? So basically what it is, the orange line is the non-farm payroll, which comes every first Friday of the month. Now, before September rate announcement, we have unemployment non-farm payroll, not this coming Friday, which is I think 29th of August. That will be probably 6th or 7th of September. So we have that. So that one number will come in between. But this is the history suggesting since 2001, every time non-farm payroll has dropped below 73K, unemployment has risen. Same thing here, and same thing in the process. Let's move forward. So keep this in mind. What happened yesterday before Powell's speech, before Powell's speech and immediately after Powell's speech? These are US dollar interest rate probability by CME FedWatch. Before Powell's speech, for 17th of September, the probability of rate cut from right now it's 4.25 to 4.5%, coming down to 4 to 4.25% was 69.6%. Immediately after that, it jumped to 91.3%. So that means exactly market has taken that the rate cut is coming, right? Now, what happened afterwards? At the close of Friday, it came back to 75%. So that means markets are very nervous, right? So they are also indecisive. Like what Fed said, that on one hand, job market is softening, but inflation is a concern, right? That has actually impacted and it came back to 75%, right? Now let's go to my observation, what I think. This chart, I've been using this chart for many years. This is US 10 years Treasury. Let me expand it a bit and see if I can. Okay. Right. Okay. So this chart is the blue line is US 10 years Treasury, and this is the US interest rates. Right? Since past many years, whenever the spread is the difference between US Treasury and interest rate goes down to negative 1.10 and lower, there comes the interest rate drop. So at the moment, if you see here, there was a negative. So US 10 years Treasury were lower than the interest rate. US 10 years Treasury were lower than the interest rate. US 10 year Treasury yields were lower than the interest rate. Here we had a similar flat, but it was lower than the interest rate. And similar situation is in the making. And every time you see the end circle, this is the one below 1.10, negative 1.10 spread between the two. Right at the moment, the spread is about 20.25 basis points, but we have seen the similar scenario. Now, what happened here, when this spread, basically it got into negative, we have aggressive rate cuts, right? All the other meetings, all the next meetings, we had rate cuts. I'm expecting a similar scenario. I'm seeing that basically we will have three more meetings left this year, September, October, and December. I am expecting all three meetings will have 25 basis point rate cut. So what I'm seeing is from 4.50, 4.25, 4.50, it will come to 3.5 to 3.75, right? So that's what the theme is. Right? Let's move forward. Okay. How far the rate can go? Let me just, okay. How far can US interest rate drop? Okay. Now the thesis here is this is the US interest rate, and historically from 1972, anytime US interest rate has dropped below 4.65 or 4.75%, the rates have gone down into the vicinity of 3.5 to 2.5%. So between 3.5% to 2.5%. See here, this was around 3.75. This has gone below 3.75. We have seen a rate drop. Similar situation here, and similar situation here, a similar situation here. And we are basically in the middle of coming up in that situation. I expect the rate to come down to 3.5% to 2.5% in coming months. Months means not immediately, maybe until mid next year, but the rate is on the downward move, right? So that's what my conclusion is. Okay, let me go. Now let's look at this is US Treasury 2 year yields. Now I have used the methodology I've used is technical analysis. Now in technical analysis, if you see from July 2019 to all the way 2022, we have seen a rounding formation, a rounding bottom. And when the market cracked through the top of the rounding bottom, what we have seen is upward move, came back, and then a large move. right at the moment, since 2023, we are actually, so if I see from July 2022, July 2022, we are forming a rounding top formation, inverse of what we are seeing here, right? I see that US 2 years Treasury yield, which is now 3.69%, almost 3.7%. It will come to almost 3%, pull back a bit, and then a sharp drop. Right? So that's what the US 2 years Treasury yields are suggesting. Right? Okay, let's move further. Okay. Now, this is US 10 years yield and the outlook of US 10 years yield. Right? So we had a double top formation. Again, use technical analysis over here. So we had double top formation between May 2024 to early 2025. We failed to break 4.8% on the yields. We came back. We tried another attempt, and we are actually dropping along with this downward trend line. That means that right at the moment, the 10-year yield is 4.25%, almost 4.3%. It is coming down to 4.10%, right? So, and it's on the downward move, downward sloping line, right? So that's what it looks like. We have a technical pattern, which is double top formation. We go down to 4.1%. And then somewhere into the vicinity of 3.6%. And if you see the symmetry between these two moves, both of them were 17 weeks of move on the upside. This is also 17 weeks move on the upside. So there's a very, very, very strong symmetry between these two. Right, guys? Okay. And so 4.10 and then further to say about 3.7 to 3.6%. This is my analysis of it, right? Okay. Now, US recession probability. In April, when trade tariff war started, if you see on the left-hand side, Wall Street Journal surveys had 45% of probability near-term recession, right? JP Morgan was at 79%, Goldman Sachs was at 65%, Apollo, I think, investment management firm, they were at 90%, right? What happened after that? In July, Wall Street Journal survey says 33%. JP Morgan is 40%. JP Morgan is 40%, Goldman Sachs is 30%, and Apollo has come down to 25%. Now, how the market sentiment has shifted from recession to drop in the recession probability. Now, there is a leading prediction, there are two leading market prediction sites, Calci and Polymarket. They are actually, in April, they were expecting 70% of the market participants were expecting a recession this year, and Polymarket was expecting 66%. That has gone down to 15 and 17% in the month of July, and I think in August it will come further down. Right? So that is where the US recession probability. Right? Let's go. I hope you guys are with me. Yeah? If you have any question, guys, feel free to put it on the chat, and I'll take care of your question Q&A. I'll take care of your questions in the Q&A session. Right? So I hope this makes sense. Now here next I'm going to show you what the TWT learning. Like, so what happened was I was with Thomson Reuters for about 12 years covering institutional clients. And the very funny thing is in 2020 and in 2021, I was added to one of the WhatsApp group for stock traders. And most of these traders were very fundamentally oriented. So Q4 earnings was somewhere in the month of January 2021, February 2021, starts in the middle of the month, right? After the quarter, it starts in the middle of the month. So most of them were expecting the market to go higher, and every time we had this conversation, and I used to say that, listen, after the earnings, even the good earnings, Qualcomm will drop or XYZ will drop. And by the grace of God, most of the time I used to be right. And they got surprised that how the hell am I getting this? How the hell am I getting this type of analysis? And I said, this is known as technical analysis. So that is where I started training those guys. And that group requested me to do a training session. And then I started doing it, and I love it, and I'm still doing it, right? So I do the training, a lot of trainings, and I'll give you a little bit about my TWG learning. What is my strategy in investment and trading? There's three-dimensional approach. You need to have a technique, analytical technique, a plan strategy, and analytical technique. Understanding of the market psychology, human emotion. Then it drills down to money management. So what we say, plan your trade and trade your plan. Do not trade your emotion, trade your plan, and manage your money management. Money management is the key, right? So the risk management is the key. And that is what the part of our training, what we offer. So then I found it, I mean, the creation of TWG learning was done in early 2021. Formally, we got into this one TWG learning in August 2023. And since then, I am into training, I'm into trading. I am a full-time day trader, investor, advisor, and all those things, right? So I'll give you a little bit about it, a little more details about it, right? Some of the rules which I have made for myself and my clients, market is always right. Price is the king, market is the master. In case of confusion about market direction, refer to rule number 1. Market is always right, right? You can remain, the market can remain irrational until you and I can remain solvent, right? That's why market is always right. If you fail to plan, you plan to fail. Plan your trade and trade your plan. Trade what you see, not what you feel. This is what I do. I plan my trade every Sunday. Saturday, I do not look at the market as a rule, just take a break from the market. Sunday evening, I'll look at the market. I plan my trade and I trade my plan entire week. So that's what I have learned from the mentors. I had a lot of mentors in my life. Some of them are, if you know John Bollinger, if you know Steve Neeson, if you know Larry Williams, if you know Ralph Akampura. So these have been my mentors through CMT platform. So let's go. What is my analytical approach? Technical analysis is a key tool to identify the market trends. Technical patterns help in clearly finding continuation and reversal trades and trends. Indicator highlights the extreme levels in prices and identify crowd behavior. Combining price action patterns indicators pave the way for a robust trading plan and strategy. This is what I do. And whilst one of the key advantage of sitting in the developed markets is they have all sort of instruments, right? So information is available. You can find the flow, institutional flow. You can find institutional news. You can find technical analysis platforms. You can find fundamental analysis platform cheaper than whatever you can economical prices, right? So I subscribe to a lot of services, and I pay, I mean, very nominal amount for those. Okay, so let's go further. And I have found in last 3 years, I started looking at seasonality. And this is a 200 years of study done somewhere in Amsterdam. If you follow the trend, these are the results. It's based on the multi-asset class. If you do the seasonality has the higher probability of winning. Seasonality is like mango has a season. Summer is the season for mango. So let's take it that way. So the market moves in seasonality, and I'll show you some seasonality charts, and we'll look into stock markets as well. Trend-based trading, trend-based investing. So what I do is I combine trend-based with seasonality, and I get a highest probability of winning, right? So let's move further. I hope you got this one. Okay, let's go here. Now, some of the educational quote, right? Education is not the learning of fact, but the training of mind to think, Albert Einstein. Now, from Malcolm X, education is the passport to the future, but tomorrow belongs to those who prepare for it today. And I love this quote from Muhammad Ali Jinnah. I do not believe in taking the right decision. I take a decision and make it right. So I take a trade and I make sure that I have the stop losses in place. So I plan my trade, I trade my plan, and I make my decision right if it's wrong, right? And this is from Muhammad Ali. I hated every minute of training, but I said, don't quit. Suffer now and live the rest of your life as a champion. He was a real champion, right? So let's go. Now, TWT learning. So let me bring you to a couple of things here. Okay. So what we offer. So I have TWT learning. This is the website for TWT learning. We are present on Twitter. We are present on YouTube. Okay. We offer 4 months comprehensive paid mentorship program. Right. It's offered by myself. You can learn to understand market psychology and order flow, learn market economics indicator, fundamentals, price action, learn screening of medium to long-term investments. We do talk about options. Somehow it's not mentioned here, but options, how to do the options in futures trading, how probability trade setups with proper risk management, stock trading, and investment. So this is a 4 months mentorship program. There are 5 modules in it. You get the recording for each and every module, and then it's 5 modules. We do it every Saturday on a weekend. After the second module, I have a private group where I do the day swing and trade ideas group. I take you into 3.5 months. You'll be part of that group, and you'll see how I trade, how I basically figure out high probability trade setups, and I give my ideas, and I make sure this is my actually commitment to all my students that once you join this program, this is my commitment that you will be able to see high probability market trades, high probability market setups, right? So that's what we offer. If you guys jot down my number, this is my number. You can reach out to me, WhatsApp. You can go to my website and look at it. And let me show you something here before we move into the stock market analysis. So this is my website, guys. Feel free to go through the testimonials, right? Okay. I've trained more than 1,300 students. About myself, if you want to read about myself, you can find the details here. Investing.com, fxstreet.com. I'll show you in a bit. So this is my details here. I put a lot of actionable ideas on Twitter. Please feel free to follow. So this is at TWT Learning, at TWT Learning, right? So you can see here, I have created this weekly market probability map where every Friday I give you looking at the history of last 70 years and give you the idea of what Dow Jones has done on this day. So for 25th of August, 52% of the time Dow Jones was up, 56% of the time S&P was up, NASDAQ was up 59% of the time. On 26th, 46% of the time it was up. So my research suggests that if it is below 49%, it's a bearish day. If it's between 49 and 51%, it's a mixed day for that index. And if it is above 51% and higher, it's a bullish for that day. That I produce. I give some ideas over here. Please feel free to follow. This is where I am on investing.com. The last article I did was on Workday. And you can find I've done about more than 50 plus articles so far. And I've started also with with the fxstreet.com. You can find my articles over here. All my recent articles are here. Okay, let me see one. Yeah. So I do cover gold, Bitcoin, US economic indicators. So please feel free to follow and feel free to give your feedbacks and suggestions. I'll share my contact details. This is what the training we offer. The other services which we do also is advisory services on the following assets to corporate and family offices on FX, interest rate, stock markets, North American, GCC, others. I have been in GCC for a very long time. Crypto for individuals, portfolio advisory, and I have a private trade idea group. So if anybody is interested, please feel free to contact me. And these are all the links what I'm actually on the social media. Okay, guys. Now let's move to, okay, all right. So dollar index. What is dollar index? Dollar index is a basket of currency index where we have euro 57.6% weight, Japanese yen 13.6, pound sterling 11.9, Canadian dollar 9.1%, and I think it's the old, so basically it should be euro. So basically this composition is, basically Swedish krona and then Swiss franc, right? What is happening with dollar index? Dollar index has been between 100 and 96.5, almost 96.4 for a couple of months, right? And that's what after the interest rate probability of interest rate drop, the dollar index is moving in this channel. The probability is it will come down below it, retest the head of the top of the channel before going down. Because the market has sensed that there is a probability of rate cuts, but there are a lot of ifs and buts. So we will have non-farm payroll before the next Fed meeting. And then we have CPI also before that, consumer price index, inflation numbers. So that will lead to a rate cut. But what I see is there is a rate cut, 25 basis point rate cut is given in September. So that's how there will be some ups and downs within dollar index, but dollar is in the bearish trend, right? So dollar index, if dollar index goes down, these currencies goes higher. Okay. Now let's talk about the seasonality. Dow Jones, NDX, NASDAQ, so NASDAQ Composite, S&P 500. Seasonality for last 20 years suggests that the month end of August to early September, market dips a bit. In September, it goes a little bit higher. Into October, it dips again, then remains in a range before it takes off. And that is what is, if you can see on Dow Jones, NASDAQ, and you can see on S&P 500 index, right? That is what the seasonality is suggesting. So I will use the seasonality as one of my barometer in showing you the next charts. Dow Jones Industrial Index Outlook, right? Dow Jones has 45K was the previous all-time high, which it has broken yesterday. Now, I have given you two cases here. The ideal scenario is Dow Jones is also in the rising channel. It comes down to check 45K before it breaks on the upside, right? This is the ideal scenario, which I think is likely to happen. But a worst case scenario, looking at the seasonality, that Dow Jones, instead of finding support at this base of the channel, which is about somewhere around 44, say 44.7K, it breaks, retests 45K and drops. So the ideal scenario is it comes down to 45K and goes higher. The bearish scenario is that it breaks through 45K, comes back to retest and goes down. Right? So technically, whenever the key level is broken, it is retested. It depends over a period of time. So how much time will it take? It takes some time, right? We can do the technical analysis. You can do the time analysis as well. So right, this is what I have done is the price analysis, and I have the privilege of doing the time analysis as well. So let's look at this. NASDAQ has broken all-time high, 22,194, almost 23K. It has gone into 24, almost 24K. Testing the base of the channel, the ideal scenario is it goes higher to 24.5K, comes down, moves higher. But if the seasonality comes in, seasonality kicks in for September, October, we'll go higher and then we'll come to retest this level. So then basically it looks like by October we retest this level before a new cycle comes in. Right? So this is about NASDAQ 100. S&P 500, we have broken the all-time high, previous all-time high, 61,6145. We are going in the upward channel. So we close at 6466. We go to 6600 before we come down and move higher further. That's the ideal scenario. Bearish scenario is we go higher and we come down. So we go higher to 66 and come down, right? But in both the cases, I think we still have a first leg up before it goes down. And I'll tell you why. The reason is next week, as per my market outlook probability, next week, Monday is bullish, 26th Tuesday is mixed. Then we have the biggest bullish move in the history, according to the probability. These are probabilities, right? 77%, 79%, 76% on Wednesday. And then Thursday, we have some mixed price action. And Friday, we have bullish price action. So Wednesday in history has been the highest green what we have seen so far. Right, so let me go back here. Let me go to, okay, so what was there? Now, okay, I think I took, sorry. Now, interest rate, Fed easing is not a good news. History suggests when the Fed is in the interest rate dropping cycle or cutting cycle or decreasing interest rate, markets have gone down. Not with the initial interest rate, but if there is a series of interest rate cuts. So when there is a series of interest rate cuts, we have seen all three indices, Dow Jones, NASDAQ, and S&P going down. That's what we have seen in 2001 to 2003. That's what we have seen in 2008, 9. And that's what we have seen briefly during the COVID. And that's what we have seen recently last year when the interest rate were dropped, Fed easing cycle, right? But if there's only one off, then this does not apply. If there's a series of cut means institutions will think there is a bigger problem than what we thought about, right? So that's what's about the Fed easing cycle. NVIDIA, $4 trillion company. I think it's $4.5 trillion company, somewhere between $4 to $4.5 trillion company. Earnings on Wednesday next week after the market. Now, NVIDIA has been moving in a rectangular formation. That's what we have seen in late 2024. And we have seen about a larger rectangle between May 2024 to all the way to June 2025. This rectangle suggests that the market, the breakout on the upside will be the equal in the magnitude, the measurement between the size of the rectangle. Next move will be equal to the size of the previous rectangle. And we are sitting at the midpoint, which is at 185. So we have seen 185. Now, there are two scenarios. I think NVIDIA has okay. So there was one article by, I think it was on MIT, by MIT. They're saying that 95% of the AI users or AI technology adopting companies or institutions are not getting the results what they were expecting, right? And that's why AI is a bubble. Sam Altman, the CEO of ChatGPT, OpenAI, he mentioned that AI is a bubble. That's why what we have seen the market going down. But keep in mind, if AI is a bubble, semiconductor selling is not dropping. I think NVIDIA will come up with good numbers for the Q2 results. And there is one problem here. China has actually suggested their companies and government not to buy NVIDIA or American chips. So they got the permission to export NVIDIA and AMD with 15% sales tax on it. So revenue sharing, 15% revenue sharing with the US government. But China has actually suggested their companies not to buy their local chips, right? NVIDIA has contacted their suppliers, I think Samsung, and there's another one saying to hold the production for the Chinese H20. Again, we'll see how the guidance comes, but there are two scenarios. 185 taken out next year pre-earnings or post-earning, we are going to 215. 185 not taken out, we come down to 150, 155, then we go to 215. But the retest of 155 is due. Whenever the previous high is taken out, market comes to retest at some point. Either it's going to go straight up to 215 or it will come down. So 185 is the decision point, right? So let's go and let's look at Microsoft. Microsoft has been rising since the earnings in the Q1 earnings. Yeah, Q1 earnings, it's been going higher. And now it has broken through the rising channel, dropped through it. I think Microsoft is going to come down to check 500. It's basically somewhere around 475 and 80. That was the takeoff point. That was the previous high before it goes higher. That's my opinion on my forecast. Tesla. I've seen some unusual option activity in Tesla, 350 calls for 2 weeks down the road. I think it's for not 29th of August, first week of September. Tesla has 340, 360 resistance. There is a possibility that Tesla might have some surprise early next week. The way the market is going, if you see on the weekly chart, we have seen a hammer-like candle, which is hammering the market to go higher. We have seen the hammers here. We have seen hammers where? We've seen a small hammer here. We have seen a small hammer here. So hammer-type candlestick pattern has a more high probability of breaking on the upside. I'll keep an eye on 360 as an obstacle. If that obstacle is taken out, I think Tesla is going much higher. Okay, guys. Apple. Apple has actually, if you see in history, whenever it has broken a downward trend line, either it moves, accelerate immediately, or it pauses for a few weeks. It's a weekly chart. Pause for a few weeks, and then it moves higher. So this is the weekly chart. So the likelihood is we have some sort of this scenario in the making, right? But when it breaks, it doesn't stop. So Apple has some room on the upside. And Meta. Meta, we have seen almost 800 on Meta, came back, dropped through this trend line. This is the earning price gap from 695 to 775. Before earning, the closing on the floor was 695. It opened next day, 775. It's filling that gap, retesting. It has retested the previous high into, say, 740 region. I believe Meta will go higher to at least 790 before it comes down and further go higher. But on the other end is Meta has stopped hiring on the AI side, right? So this ideal scenario for me, it will be it breaks for 780, 790, comes down and moves higher. The bearish scenario, if the seasonality kicks in, we go to at least 780, 790, and then we drop. I think we are very close to, okay. Google is trading around 201, 207 previous all-time high. We have seen briefly it went up to 208. Google, ideally, it should go further higher to 220, comes down, moves higher. But in case of a bearish scenario kicks in, this is the previous high, this is the recent high, this is the previous high. We are hovering, trading around the recent high. So we come down to retest this level and move higher. Ideal scenario, we keep going higher next week. The bearish scenario is we come down to retest this channel. So ideal scenario is we break the channel, top of the channel, and we move higher. The bearish scenario is we come down, retest this channel, and move higher. That's all from my side, guys. Yep. Open to Q&A, guys. If you have any questions, please feel free to share.
Yes, Ali, I think we have one question,
Sure.
which is part of Q&A. How the weights of other currencies impact USD indexes?
So basically, if you see the USD index, it's at 57%. So if a US dollar index goes down, 57% is the composition of euro. So 57% impact will be on the euro. So euro will move higher. Then there comes the pound sterling, which has about 12%. So I think after, if dollar goes down, euro will be stronger. I hope this answers your question. Any other question, guys? I think we are on time, right? Yeah, almost.
Yes, yeah.
In time, right? So, guys, these are the, if you like, I mean, I'll share it in the chat. Can you share it in the chat?
Yeah, sure, no problem. You
Okay.
can share.
Okay. So
Or
if you,
otherwise, we will be sharing with the members or non-members later on as well. But you
sure.
can share it through the chat.
Yeah.
It's
So these
fine.
these were the links. So let's see. Okay, right. Let's see. So let me send this. Sorry, 1 second, guys. So feel free to follow my social media, guys. Right. So I've given you the links because this will give you the link once you get the presentation, the links. In the presentation, it will be there, but in the PDF, it will not be there. And guys, feel free to reach out if you have interest in learning for attending 4 months mentorship program. I'll be more than happy. These are my contact details, guys. And any of these services, if you're interested on any of these asset classes, a corporate or a family office or individual, please feel free to reach out to me. If there's any question, I'm happy to take care of it. Do we have any questions? Further questions?
So any question from anyone, we can open up either the mic or you can type.
Please feel free to make it interactive. We can speak 5-10 minutes if you like. Now let me take some water, please.
Yeah, we'll just wait for a minute. Otherwise, I'll start doing the closing remarks.
Sure. Guys, you have 1 minute. If you like any question, please feel free to ask. Don't feel shy. I mean, if you have any questions on what I have talked about, the US interest rate, let me go through a bit. I'll just scroll it. So if you like to ask any question, anything on the US interest rate, Fed, right? Anything on Fed, US interest rate, why the split, how the US interest rate probability has shifted, the comparison of 10 years US Treasury yield versus US interest rate, how far can US interest rate drop, and my logic about it, US Treasury 2 years yields, US Treasury 10 years yields, US recession probabilities, then of the investment and trading approach I have just discussed with you, all those market rules which I follow, the strategy here, as the seasonality, some quotes on the education, the TWT offering, 4 months mentorship offering, the other services offering, advisory, and for individuals here, US dollar index, okay, and then seasonality, Dow Jones outlook, DJI Dow Jones Industrial outlook, Nasdaq outlook, S&P 500 outlook, Fed easing cycle. It's always not rosy when Fed cuts a series of cut comes in, right? NVIDIA outlook, and Microsoft outlook, Tesla outlook, Apple outlook, Meta outlook, Google outlook. And if there's any question, feel free to ask, guys.
Yeah, so we received two more questions. One is, shall we enter in US stock market and crypto now as a swing trader?
Well, actually, I will basically wait for the seasonality, which I've shown you guys, because all-time market high can go and retest the levels, right? What seasonality we have seen is, I think looking at the seasonality, the good time is somewhere in October. We might see a spike in September if you want to go for, say, a couple of weeks, right? After the rate cut. So there's one we all have, if you have not heard, I'll explain to you, but it's all well known in the market. Buy rumor, sell news, right? So at the moment, there will be a buy rumor sort of a rally because there's a rate cut. After the rate cut, generally market goes down. If you want to go for a larger swing, I would rather wait for the dip in September, right? If you want to go for 2 to 3 week swing, I mean, I would suggest look into the Russell 2000. Anything which is like small cap, because small cap and mid cap companies are the borrowers in the market, and they will get the benefit of this rate cut. And you will see some rallies here and there. Like one of the name which comes to my mind is SoFi, SOFI, right? It's a financial services company, heavily based on the interest rate, right? That is one of the, and SoFi has, I think, broken 25, 20, it's at $25 first time, I think, on the weekly basis. That is one of the name comes to my mind, right? I will definitely keep in mind Tesla, right? If Tesla breaks 360, there's something is happening in Tesla. NVIDIA cautiously, I still think NVIDIA results will be better than expected. 185 is my barometer. Post earning, it breaks 185, 186, 187. I know the room is 215, right? So that's what my idea is. I hope it answers your question.
Okay, so the next question is, I think it's not question. It's I think you have already answered. Like, can you tell more about your training program and charges? So I believe you have already, Ali has already mentioned his details, contact details, including his website and social media accounts on in the webinar chat. So if everyone can see and they can copy the chat and contact Ali later on.
Yeah, so please basically feel free to WhatsApp me. I'll give you my contact number. So please feel free to, I'll put my contact numbers on the chat. So feel free to actually reach out to me on WhatsApp or text message me. So it's +1 647 955 6837. And here is the contact, and the email address is admin@twtlearning.com. And twtlearning.com is the website, so I've shared with you guys.
Yeah.
Guys, it was a pleasure. Salman, it was a pleasure conducting this webinar. Thank you very much, guys.
Yeah, thank you. So closing remarks from my side. So first of all, I wanted to extend my sincere appreciation for Ali's engaging presentation, basically, during the recent webinar or today's webinar on the USD interest rates, economic indicators, and stocks related outlook. So you have given us the insight on this topic, which is particularly, I can say, very much valuable, and have given me or even the participants a fresh perspective on the movement of interest rates and stock outlook. And I truly appreciate Ali's effort to incorporate the latest developments into his presentation, especially when you referred the chairman Powell and the recent meeting notes. It's added, timely relevance and depth to the discussion. Um, so Apart from that, we are going to have a kind of similar or connecting webinar on major FX and crypto outlook. Uh, it will be covered, I believe, for the US and Saudi Arabia key economic indicators based on that, basically. This will be presented by Ali on 20th of September 2025. And another webinar is also planned on 4th of October 2025 on the project management for CFOs. So we will be having another speaker, Hasnan Rizvi. So we'll introduce him during the webinar. Regarding participants, your presence and contribution were truly appreciated and added a great value to our discussion. So finally, I'll say thank you so much to everyone, as especially to our speaker for sharing valuable and his expertise in his areas so generously. So it is a pleasure to learn from you, and I look forward to applying what we have learned today. And thank you so much for everyone. Have uh, a nice and good evening. Yeah.
Thank you, Salman. Thank you, everyone. Have a wonderful evening, and let's stay connected.
Thank you. Bye.
Bye.
Bye,
Thank you,
everyone.
guys. Take care. Take care. Bye.